Hi and welcome to this video on the MACD technical indicator. I'm going to be showing you how traders use the MACD indicator to get into trades and basically why traders use the MACD. So the MACD stands for Moving Average Convergence Divergence and is a technical indicator used by traders to gauge momentum and potential trends or potential future trends. So the MACD consists of two lines, and one is the MACD line and the other is what we would call the signal line. So the MACD line is the orange line that we see here, and that is basically derived by calculating two moving averages and subtracting one from the other. So the first moving average would be the 26 period exponential moving average, and they would subtract that. The calculation is derived by subtracting 26 period moving average from the 12 period exponential moving average, and this gives us our orange line. And the blue line is called the signal line, and it is a 9 period exponential moving average, and it's plotted alongside the MACD or MACD line. And how traders will use this is when the signal line crosses, so when the blue line crosses up and above the MACD line, which is the orange line, this indicates a buy signal. And when the blue line, the signal line, crosses down past the MACD line, that will indicate a sell. Now we have also this what we call a histogram, this kind of pink reddish bars that are pretty much going up and down. So the histogram is just a reflection of what the MACD line and the signal line is doing. So if you notice that as soon as if we zoom in a bit, if we have the signal line, blue line, cross the MACD line, if you notice we go from positive bars going up to now bars going down, negative. And if we look here where we have the signal line crossing the MACD line to the upside, we notice we have now what we would call probably positive momentum to the upside. So instead of having bearish momentum to the downside here, once it's crossed, now we should have some bearish, or it's indicating potential bearish momentum to the upside. Now the MACD is a lagging indicator, so it's telling you what's happened in the past. It's not necessarily trying to predict what's going to happen in the future, although traders will try to use the MACD to predict what is going to happen, but it's a lagging indicator. Again, just going over the ways that traders will use the MACD is one way is to look for a buy signal once the signal line crosses the MACD line to the upside, and that should indicate some sort of bullish momentum and potential trend to the upside. And once the signal line crosses the MACD line to the downside, then that would indicate a sell for traders. Now, just like other indicators, you should never trade this in isolation. What you want to do is at least have some confluence with the indicator, whether it's support and resistance, whether it's or you trade supply and demand levels, if you want to look at the overall trend and things like that. So you want to trade it with confluence and candlestick patterns, potential reversal candlestick patterns if you see something here to the upside, and then you also get the MACD cross, the signal cross the MACD line to the upside, then that could be your confluence. And as you can see, you saw some bullish engulfing candles here, and prices did go to the upside. Now, Another way that traders trade the MACD is by using multi-time frame analysis. So if you haven't watched the video on multi-time frame analysis, I suggest you do watch that video, and I'll give you an example of what I'm talking about in that video. But in this video, if you don't understand, just like I said, just go to that video and that'll explain everything. But what they would do is use the higher time frame. So traders will use a higher time frame chart, and then they will use the lower time frame for entries. So what you want to see is, if we go to the daily time frame, and you can pretty much see that we have an uptrend. So we were in a bit of a ranging market, and then prices kind of broke out to the upside, and we've had prices make higher highs and higher lows. Now, once price broke out above a certain level and prices pulled back, and once we then had confirmation here of, you know, some buying going on, we also had the MACD line was crossed by the signal line. So now on a daily time frame chart, we're looking for bullish or buy signals. So then what would happen is traders would go down to the lower time frame and look for bullish entries. So right, so we have the cursor, which moves on the hourly time frame, which is the above time frame, and we've got the euro dollar on the daily time frame on the lower time frame. So the candlesticks are pretty much synchronized. So once we move across, we can see that the daily starts to move across. So it was really from this point here on the daily time frame. Oh yeah, from here on the daily time frame, where we saw the signal line cross. So let me just highlight that for you. So it was really right here is where we saw the signal line cross the MACD line. So this day here. So now what traders will do is look for, on the hourly time frame, is look for the signal line to cross to the upside, cross the MACD to the upside, and look for an entry. So we can see right here that we had prices cross, we had the signal line cross to the upside, and this would have been a potential entry. And as we can see, prices went higher, and we would keep doing that until maybe we saw a clear direction of a downtrend. So now we get the signal line cross the MACD to the downside, which is right here. So now, looking at the hourly chart, because the daily time frame is usually and should be taken as the more significant time frame. So once we had a cross to the downside, really was right here. What traders would then do is look for any crosses to the downside. So we had one here, and you can see prices fell away. We had one here, around here, prices kind of went down slightly. We had one here. You can see prices from here decided to make their way lower. And again, it's just about looking at the higher time frame charts and getting your overall bias from the higher time frame charts, and then looking down at the lower time frame charts for entries. So I hope that helps, and if you do have any questions, please email me at info@trading180.com.